please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to Halftime Report. It's 12 noon. We're halfway through the trading session and so far pretty lackluster, you would say so. In the last one and a half hour, the markets are pretty much unchanged. But we're outperforming the rest of the Asian markets after underperforming from the beginning of the week. So today you've got the Hang Seng and the Chinese markets down close to about 0.5 to 1%. In comparison, at least we're managing to hold up in the green for the benchmark indices, though the advanced decline ratio is negative, so more stocks in the red compared to that in the green. Hi, Nigel.
Hi, Rima. Well, we'll keep an eye out on the Nifty Bank as well. Today is a Thursday, so we'll have the weekly expiry that will play out, and that's why the Nifty Bank has been moving around in that 100 point band or so. So pull up the Nifty Bank, keep an eye out on that front. Now, in fact, we're moved into the green, so it's already making that move, but the last hour of trade, I think, will be quite interesting, and that explains why, in fact, the Nifty as well is sitting well at the green. We'll talk about that. We'll talk about a whole host of stocks. First up,
let's drill it down to individual stocks then. Not too much movement, at least at the index level. This is our movers and shakers segment, and in the commodity pack, it's zinc prices which have now hit a 4-month low. Nigel, so the impact will be on Hindustan Zinc, and once again give us the overnight update on what's happening with aluminium as well as alumina.
You know, Rima, not good news for zinc, while in fact good news for aluminium as well as alumina. For zinc, why is it not good news? Because in fact LME zinc prices have moved to near 4-month lows. In today's trading session, it's down by close to around 4%. That's on the back of speculational reports that China's State Reserve Bureau, they are planning on releasing various stockpiles. Now remember, the entire rally of zinc from around $2,500 per ton to $3,500 per ton was because there was a global deficit. Now, in fact, if there is a release over there and there are supplies coming on stream as well, that deficit could go out of the window, and that could explain why, in fact, the prices are moving lower. Just to give you a few numbers, total zinc production is around 13.5 million tons. So interesting to see what is that number if they're going to release the stockpiles. Moving to NALCO, why is NALCO doing well? Well, the last alumina shipment has moved at around $601 on a per ton basis. Just from February till now, just take a look at the price movement, $355 to around $601 per ton. Now, importantly, maybe these prices will not sustain, but even if it holds above $500 on a per ton basis, NALCO will make good amount of money because 80% of their EBITDA comes in from alumina. So we'll keep an eye out on that front. Why has alumina prices been moving higher? Because Brazilian Nox Hydro Alunorte, or there in fact we have a capacity shutdown to the tune of around 50% of its total capacity, and that explains why in fact we are seeing a big surge over there. In fact, we spoke with the management of NALCO early this morning. Let's listen in to what he had to tell us.
Our tender yesterday, which we opened it is $601, and it is confirmed, and within a week there has been an increase of around 27% in alumina prices, because before that the price was 473, and market has moved very steeply. Aluminum prices has also made a big jump from $1,967. It has gone to $2,253, which is around 17% growth. So we have little earlier difficulty in aluminum sector, and now with this price will be quite comfortable there, and with comforts in aluminum sector and aluminum making a steep increase, definitely we expect a very good benefit in EBITDA terms. We expect that it will be positive, EBITDA positive with this level of price.
Well, we are seeing some weakness on the Indian rupee, and that's normally good news for IT companies. Rima, ahead of Infosys numbers, well, a lot of these IT stocks are doing well.
Yes, quite the outperformance, right? Yeah. Since the start of the year, YTD, the Nifty is down 1%. The IT index has gained close to about 12.5%. So today, you've got Hexaware and Tech Mahindra trading at fresh 52-week highs. Even the other companies are not far behind. A Mindtree, a KPIT Technology, HCL Technology are just 3% away from their 52-week high. As Nigel rightly pointed out, it is courtesy the rupee. The rupee has slipped to a 5-month low. Just in the last 3 trading sessions, the rupee opened the week at levels of 65, in a span of 2-3 days, it's depreciated close to about 0.5%. But also more importantly, compare it to what it did in the Jan to March quarter, where the average was 64.7. So compared to that level, the average of the prior quarter, we've seen the rupee depreciate by close to about 8.5%. This is important because IT companies do not have too many margin levers from here on. They're already trading pretty much at peak capacity utilization. On account of increasing contribution from digital, their costs are centered on site because customers want the employees to be based on site in order to execute these new age digital contracts. So the costs are going up, and the companies do not have that many tailwinds because, as I said, utilization is pretty much, which is the key tailwind, is operating at peak capacity. So rupee depreciation will aid their margins. Also, of course, focus will be on Infosys tomorrow. The first guidance under the new CEO. The street is expecting the company to give out a guidance of 6 to 8% in constant currency terms. So let's see.
All right, Rima, we'll watch out for Infosys. We'll watch out for that guidance, and I'll also be interested, Rima, to watch out what they're going to do with their cash, how they're going to be returning the cash to the shareholders. That could be another point. Like last year, they did a buyback. If they can give any kind of guidance on that front as well. So we'll keep an eye out on that stock today. Up close to around 3%. In fact, that could be one of the major contributors to the green that we're seeing on the screen with regard to the Nifty. But Dish TV, that's the other stock in focus. We had a large trade in the morning. We have an open offer. And also, as we heard earlier, there's a guidance in terms of what kind of synergy benefits can flow through. Mangalam joins us. He's going to give us through all those details. Mangalam, over to you.
Absolutely, Nigel. It's all happening as far as Dish TV is concerned. So there was an open offer in the morning for 26% equity, which is a mandatory open offer at a price of 74 rupees a piece. And why did that open offer happen? Well, because pre-open, there was a bulk deal of 9.15 crore shares. We understand is the promoter entity which has bought that stake, which is 4.97%. However, thereafter, they also informed the exchange they propose to acquire another 50 lakh shares. So that takes the promoter purchase above that 4.99% mark, closer to that 5.02% mark. And that is what triggered the open offer. However, whether retail shareholders will subscribe into this or tender into this open offer or not is something that remains to be seen. The big catch, however, is the Videocon D2H guys who own in excess of close to around 37-38% in the merged entity. They're not classified as promoters. So are they going to tender in open offer and thereby causing the current promoters to go ahead and increase their stake or not is something that remains to be seen. But for retail investors who've probably bought it around that 90 rupee mark where the stock was when the merger was announced, the company has given a guidance 180 crore worth synergy benefits in FY18, 500 crore plus in FY19, and that goes up to 750 crore plus in FY20. They'd probably like to wait by and see whether these cost benefits come by and whether that reflects in the share price or not. Currently, it's off its 52-week high, so it'll be very interesting to see who participates. Videocon D2H is something that I'm watching out for, whether they participate or not.
Okay, thank you very much for that. And the battle for Fortis has only gotten more interesting. One day after the Manipal TPG combined sweetened the offer for Fortis, we understand rival IHH Healthcare could be making a counterclaim and a higher one at that for Fortis. This is what Nisha, our colleague, is picking up from her sources. Nisha, over to you.
Thanks for that, Rima. Of course, sources with direct knowledge shared that IHH late last evening has reached out to the board of Fortis Healthcare and has put in a counter offer for buying out Fortis Healthcare. And this is, remember, pitted against the bid that has already been given by TPG Manipal, which announced the deal to buy out Fortis Healthcare. Now, remember that the deal and the bid that has been given by IHH is a non-binding offer and is proposing to buy out Fortis Healthcare for close to about $1.3 billion, which works out to be a share price of 160 per share for Fortis Healthcare shares, which is a slight premium to what Manipal, backed by TPG, has offered to pay. We don't know the structure, but one thing very clearly is to be seen is that it's a non-binding offer compared to a binding definitive offer which has been given by Manipal TPG. So is it a half-hearted attempt by IHH? Needs to be seen. Ball is in the court of Fortis Healthcare board, which will be deciding, and also the shareholders who have been appeased to some extent by TPG Manipal by revising not just the valuations for Fortis Healthcare deal, but also by changing the structure of not making Fortis Healthcare a holding company post their deal. So we have to really see, but the competition has kicked in, and it's only cheers for the shareholders of Fortis Healthcare.
Okay, all right, Nisha, thanks so much for that. Well, Biocon's the other stock we're looking at on news that Biocon and Mylan, they've announced a deal to introduce a biosimilar in the European Union. Here's a word coming in from Kiran Majumdar-Shah.
Mylan basically fronts the commercialization of biosimilars in US and Europe, and we basically get a profit share of this business. So the same holds good even for this particular arrangement that Mylan will have with FKB. Over time, you are likely to see at least 6 or 7 players. But at this point in time, I don't think we're going to see more than 3 to 4 players. We have completed phase 3 trials with this drug, so we will not drop it. It was just that we were too late for the European market.
Okay, then here's a quick recap of all the buzzing stocks that we just covered. We have Hindustan Zinc, Nalco, we had Mindtree, Hexaware, Tech Mahindra, Fortis, Dish TV, and finally, Biocon. From the broader markets, keep an eye out on a few of these stocks. CEAT has moved to the high point of the day, so I think we should get an intraday chart of that stock. You also have a stock like Canara Bank that's moving higher, so just spot that one as well. While ADF Foods, that one has seen a sharp correction from around the 320 to around 220 odd. That stock's moving higher. It's moving higher on good volume, so just keep an eye out on that one. And also GMR from the broader markets, well, that's down close to 4%. So I think we'll have to keep an eye out on that stock as well. GMR Infra moving to the low point of the day. But let's give you some opinion then. As promised, we spoke to Nilesh Shah earlier today and asked him if he's still bullish on IT sector companies since IT companies have kick-started earnings season. Let's listen in to the slice of that conversation.
I think it makes sense to remain constructive on the sector. I think the last 2-3 years the sector itself has gone through a lot of tepid growth, a lot of turbulence, huge changes in the demand environment, pricing pressures. I think all the negatives that you could really flag off have kind of materialized and transpired, and because of which these companies have actually grown in single digits. For the next 2 to 3 years, I think is very positive on the sector. Because a lot of the new areas, I think, is going to start contributing a larger share of the revenues for these companies. And these companies have reoriented themselves. But it's still going to be a bit back-ended. So I'm not expecting any of these companies to really stand up today or tomorrow and say that we're going to grow in double digits. I still think that the guidance that they will kind of give out is going to be high single digits at best. So one needs to be a little careful not to get carried away. And I don't think, and I still think they're a few quarters away from stepping into a double-digit growth environment. So one needs to be a bit careful there. I think in the very short term, they could have tailwinds from the rupee-dollar equation. I mean, the fact that now, the rupee-dollar is at 65.40, that really helps the margins in terms of the rupee terms. So that could provide some some tailwinds in the very short term. But otherwise, I think from a 2 to 3 year horizon, I still think that it's a sector to be kind of positive on.
But mid-cap IT has delivered, in some cases even double-digit growth. Do you think that still has enough niche and that can still, do well from here on?
Yes, I think, Anuj, that's really where the big opportunity is within the sector. It's pretty akin to the consumer space where you have the big guys like HUL, ITC who still grow in single digit, but then a lot of the tier 2 consumer names who are in specific niches end up doing well and growing at a much faster pace and at a higher rate. I think technology is no different. Obviously, if you really look at slightly longer term horizon, say the last 10 years, then obviously they have not been able to grow at a faster rate. But the whole world of technology has changed. And honestly, really size is no virtue. So if you are in a specific domain and kind of have solid expertise around that domain, you could end up doing a lot better, growing faster, carrying a much better pricing advantage. And that's precisely what's really happening in mid-tier IT over the last few quarters. And we see this sustaining for the next 2 to 3 years also. So a lot of the mid-cap IT companies who are doing some really nice, solid work in a specific domain or a niche, I think they will end up doing much better than the biggies.
The other cue that this market has had to deal with is sudden, spiral back up in crude oil prices and what's happening with, duties, etc. Your thoughts on both oil marketing companies and on the upside, if you were to look for plays on crude, there aren't too many in our market, but is there something you'd go for?
I think overall the sector is a clear avoid. I don't think one should really be kind of looking at OMCs at all. given that the next 4 to 5 quarters we are going to be in a politically and an election kind of a period. So in this kind of an environment, you know, that's a sector to avoid. And we really don't see the government or the regulators giving that kind of complete freedom in pricing, which the OMCs can pass on. So I think it's a sector to clearly avoid. But I think on the flip side, some of the engineering companies in this space, they look very good because higher crude oil prices means obviously more capex in the sector and obviously therefore more business, more work for them. So clearly within the oil and gas sector, stick to some of the engineering companies in this space. There are talks of some of the other players in the sector who are going to kind of see unbundling of their businesses, and that will unlock value. So some of the gas transmission, gas utilities, I think that's a space to really watch out for versus the OMCs.
What's the consumer durable space looking like for you? It's only consumption stocks that have been doing very well.
Yeah, I think you know, I think the entire consumer space is looking very, very good. You know, I think they've had some bit of a tepid growth environment, but I think the next few quarters are going to be fantastic for the entire consumer space, and more so for the consumer discretionary spend. That's a big kind of an opportunity to really look forward to. The appliances space has turned a bit expensive. Most of these companies are trading between 40 to 60p multiples on trailing earnings basis. So I'm not quite sure as a value investor there's too much of upside in them. But I think the big opportunity within discretionary is basically this whole travel, tourism, hospitality. That entire space looks very, very exciting. Most of the companies here, most of the stock prices have corrected quite significantly in the last few months, and that presents an opportunity there. Some part of pricing power is coming in. There's been a fair bit of consolidation which has happened in this entire space. So I think this entire space called hospitality, travel, tourism, resorts, this entire space looks a lot more attractive versus the consumer appliances space, and that's the space to watch out for.
Flat on all the benchmark indices, the Nifty and the Sensex up a couple of points, unchanged for the mid-cap index, and the Bank Nifty too absolutely flat, just down close to about 2 odd points. Let's address the flashes that you could see on your screen a little while earlier, where sources tell CNBC TV 18 that the government is comfortable with the budget numbers on FY19 LPG and kerosene subsidy. This, of course, has to be seen in light with the rising crude oil prices, with Brent crude now above $72 per barrel. Sapna Das joins in on the phone line with more detail. Sapna, the government's comfort level with crude oil prices and therefore the subsidy it will entail in this financial year?
Well, yes, the indication on this front at least is extremely clear. They are saying that, in fact, the current subsidy allocation of a broad number of 31,000 odd crores for both LPG and kerosene put together in the FY19 budget, they are saying that, in fact, there is already a cushion available in these numbers for any kind of price fluctuations, quote unquote. So, at least as of now, they are looking very comfortable on this. The second aspect also is that they're hoping with the further expansion of the DPT network, in fact, they are being positive that there could be some further savings. So we have to really wait and watch and see how this pans out. But as of now, absolutely no worries. In fact, the sense I got was that there could be a savings of at least 2,000 to 3,000 crores by the end of the financial year. But as you have just pointed out, the behavior of crude is something that everybody needs to watch out for. So at least on the LPG and kerosene side, they appear to be quite confident. However, as far as the real concern now are the petrol and the diesel prices in the retail markets. So on this front also, the sense we got was that, this volatility has been there for some months. Sometimes it goes up, then it comes down. So they are watching the prices, of course, very closely. But the sense I got very clearly is that excise duty cut probably doesn't appear to be an option at all, at least at this stage. On the contrary, in one voice, the indication is that probably the states would be in a better position to reduce their VAT duties. Now, of course, states will have their own contention on that front, but no serious discussion, no call as of now. They are just watching the trend because it may be possible that even if there was some kind of a very informal mulling happening on this front, if the prices come down again in a few days, possibly the requirement for a cut will not be required because that's fiscally very, very sensitive. 12,000 odd crores government has already lost in excise revenues in FY18, and the full year's impact for this year is expected to be around 26,000 crores. So that is where we stand as of now.
Okay, all right. Thanks so much for that, Sapna. Well, in the meanwhile, I think we should look at the broader market. A whole host of stocks are moving higher. JK Tyre, pull up the intraday chart. That stock is suddenly spiked up. You have a few more of these stocks, something like a GNFC as well should come up for you on the screen. That as well has spiked up in the last few minutes. And Tata Sponge as well as Tata Metallics. Let's pull up both those two stocks. Some of these stocks really should come up for you. The intraday charts is what we're talking about. The JK Tyre, GNFC, you pull up Tata Sponge, Tata Metallics. All of them, they're all spiking up in the last few minutes. So just pull up a couple of these intraday charts. You'll see that some of these stocks in the broader markets, they're moving very, very well. And also pull up this other BSE listed stock, WPIL. Well, we were highlighting earlier this week that the promoter has been buying from the open market, and that stock as well has suddenly seen a bit of a volume spike. It's moved to the high point of the day, so just keep an eye out on that one. Up close to around 4% as we speak, moving to the high point of the day. The promoter has been buying from the open market, so just keep an eye out on that stock as well. But moving on then, with Singapore Exchange announcing listing of new Indian equity derivatives products in June, NSE today said it will discuss the matter with the market regulators, SEBI in fact, and also other exchanges to decide on the course of action. To get you more details on this, in fact, we spoke earlier today to Mr. Vikram Limai. Let's hear out what he had to tell us.
The plan is to try and get more information surrounding what they plan to do and have a conversation with SGX to understand better what the product structure and product terms are and how that product is actually going to work. The genesis of this has got nothing to do with NSE and SGX. The genesis of this has to do with the principle of whether it is in the best interest of Indian markets long term to export liquidity or fragment liquidity. And the answer to that has to be no. We will examine what SGX has announced and see what the product features are and how that product is supposed to work. Okay. And then see whether it's compliant with what we've announced or not, and then decide on what the future course of action is. Obviously, we will talk to the other exchanges and the regulator as well if there is something to be done. So the exchanges made the announcement. There have been conversations that we have had with SGX as well to figure out how we can transition the liquidity in the SGX Nifty to GIFT City or to onshore in India. There have been several rounds of conversations with MSCI as well, and we've obviously spoken to them about the rationale for what has been done. They're obviously going through their process in understanding the situation better. Which certainly from our perspective, we've done what we can to explain the situation to them. They will also talk to other market participants and then formulate a view.
Okay, let's get in some market opinion then. Ashwini Gujral and Rajat Bose are here with us on the show. Ashwini, so far pretty dull for the benchmark indices. Your thoughts?
See, the trade was in the morning when the Bank Nifty gapped lower and has recovered broadly to its yesterday's close, which is about equilibrium. I think now the next move will probably start only 2:30 on the Bank Nifty when the expiry issues come in. So broadly market remains range bound. So the major opportunity is probably gone. But what's interesting is that ICICI Bank and Axis Bank are moving back up. So probably a resumption of the rally is happening there. So for the moment, financials are seeing short covering, and that's possible that it could see further short covering. IT maybe is done for the day. So Bajaj Finance is a buy with a stop of 1920, target of 1965. IndusInd Bank is a buy with a stop of 1850, target of 1885. And HDFC Bank is a buy with a stop of 1900, target of 1945.
Okay, all right, Ashwini, thanks so much for that. Well, let's get in Rajat Bose as well. Rajat, what picks you have for us today?
I have two stocks to recommend. One is a buy and another is a sell. First one is Biocon. I would put a stop loss below 624.50 and targets would be 636 and 639. And McDowell April futures, that is United Spirits, stop loss above 3435 and targets would be 3395 and 3380. Disclosure has it that I hold both the stocks in my investment portfolio. McDowell is in a downswing today, and after yesterday's kind of big move, today this is a corrective swing. I'm expecting it to complete by 3375.
Ashwini, tire stocks are in top gear today. Your thoughts?
See, that rally continues and I would think CEAT, MRF, etc. can be bought from here. Now, it's difficult to say whether they are moving up as consumption or, commodity plays, but definitely these stocks show momentum. But the real strong, big move is on IT, and my sense is probably the IT index will hit new highs.
Oh.
So if you haven't gotten in, I think today is a good time where resumption of the rally has really started on IT.
Okay. Ashwini, just one follow-up question on IT. Which mid-cap IT has the strongest chart according to you?
See, the first part of the move, everything goes up because right now nobody knows which IT company will do well. So NIT Tech, Tata Elxsi, Mindtree, Hexaware, all these stocks will move up. After this quarter's results, maybe some differentiation will come in that X company has done well and Y hasn't done well. For the moment, I think it's a rupee play. It's basically a play expecting good results. So chances are all of these mid-cap IT stocks will move up.
Okay, all right, Ashwini and Rajat, thanks so much for stopping by and in fact giving us those details. Well, keep an eye out on our markets, but also we have the initial rates that are coming in from the European markets. So let's see what the initial rates are out there. Well, it's more or less a mixed bag. They're as flat as can be. So just, that's we'll take that. A flattish opening is what we're seeing on those European markets. But our own markets, a few stocks are seeing some selling. Yes Bank is moving lower. Z Entertainment as well has taken a bit of a knock. And I think, a couple of other names as well. Reliance Industries, that was more or less flattish. Now it's down close to around 0.5%. So I think just keep an eye out on a few of those.